Hi guys, last year summer I recorded a video about which countries or which indices that we can invest in the last 2 quarters of the 2017, and in the end we talk about the United Kingdom and also the Canada TSX index, right? For example, in the 10-year stock market, we look at the TSX index. We will see at the time we posted this video, the index was around 14,900 points, and now it's over 6,000 points already. So if anything about funds or about ETFs or about any stocks listed in Canada, you should be profiting right now, because this is about calculation. It's not a guessing game. So everything we have to do our homework, we have to have our preparation done, and then we'll execute. That's it. So today, if we look at the same topic, unlike last year, we are recording this in the beginning of this year. So which of the 3 countries may be the best investment in 2018, and how can we invest in that? So we will suggest some stocks or ETFs that you can invest in case you're not really closely monitoring the stocks market, right? So leave this job to me and I'll share this video to you guys, and you just give me likes and shares. And you have any questions or anything you want to add, please leave me comments in the comment box right below. So if you're first time watching this video, please subscribe to my YouTube channel and like my Facebook page, and we'll see you every Monday, Wednesday, and Friday. So we'll use 3 calculations to determine the growth of an index. So the first one is the capital and the assets growth. We are meaning the growth in the balance sheet, meaning the assets is growing and the liability is shrinking, and we're talking about the price to book ratio versus the growth of the assets, not the earning, right? So globally in the major index, the number 1 is Canada again, okay? So it's not that I study in Canada, right? In fact, it's about calculation. It's not about bias. It's talking about not one of the biggest growing countries. It's the number 1 assets growing country among all major countries and indices. So it's forecast to be in the next 12 months, the assets is growing in the whole Canada is growing by 18.9%. It's talking about not just Toronto and Vancouver, it's including Yellowknife, Edmonton, Nova Scotia, cities like that. So it's the whole Canada growing by almost 20%. It's a staggering 20%. It's really high. So by the time you are seeing this video, only by last week, Canada has raised the interest rate. So is that a concern? It's not a concern. First of all, we'll talk about after raising interest rate, they talk about if they keep on raising interest rate, they may have concern about the economy growth. Their only concern is about the housing market for now, right? So it means that the interest rate high cycle may be slowing down. But in fact, I've talked about in previous video that the correlation between the interest rate and also the economy is positive correlated. So again, if the government is going to raise interest rate, in the long run, it represents the country is having a really good economy, right? For this point, I will talk about a little bit more in the 3rd point. So it's nothing to concern about, and if that's healthy, again, Canada is really strong because it is expected Canada to raise the interest rate for another 4 times in 2018. So again, I prove and statistic about that. It's nothing to worry about. It's something in short term to worry about. In a longer term, it's really good. So again, we can look at the index, which is the TSX index. We can look at the index. You can buy it now. Whenever the index drops below 16,200 points in the short term, you can cut loss. But in the longer run, I suggest you set it as 15,800 points, especially you have been invested in this index right after you watched my video last summer. You bought it at a really low price. It's really good that you can set the fluctuation a bit wider so you won't cut loss that easily. So about stock, you can look at another stock. It's called Manulife. So the Manulife and the Canadian dollars and also the TSX index is really highly correlated. Again, it's about the Canadian dollars, right? Another point is about the US dollar index, because the US dollar index is dropped from 104 to now almost 90, right? So passively, Canadian dollars is appreciating for almost more than 10%. So any industries about finance industry, insurance industry, properties market, it's only about the forex difference. The balance sheet is already accumulated and appreciated by at least 10%, right? Because of that, Manulife is an insurance company. That is a stock that you can look for. And Manulife is also listed in Canada and also listed in United States and also listed in Hong Kong. So if the US dollar is appreciating, it's really good. But if it's not, the 40% of the sales is from United States, right? Another 20 is from Canada. Another 40 is global. So that's fine for Manulife. And technically, if you look at Manulife listed in TSX index, it's called MFC, and the peak is around $27.80. So whenever you can buy it now, so whenever it drops below $25.8, you can cut loss. But if it breaks above $28 per share, and no matter short term or long term, you should buy this stock anytime at that level. So this is a stock that is really highly correlated, and if you purely want to invest in the Canadian stock market, you can look for EWC, which is an ETF listed in the United States. The correlation is as high as 0.915. So the NAV per share is now around $30 per share. But again, if you want to kick into this market using this ETF, you don't need to do any charting analysis in this ETF. You only have to look at the TSX index, which I have just analyzed earlier in this video. So this ETF is consisted of around 42% of financial, which is exactly why we're investing in this ETF, and is kind of mirroring the index, right? It's really highly correlated. And the second method we'll look at is the growth. We're looking for the Peter Lynch model, which is the lower PE and higher growth, this ratio. We can look at the Russia index and also the Dubai. So it's pretty surprised that Dubai is on our list, but we've been talking about Russia for 1 year and Dubai for half year. So we can look at that. So the Russia economy is almost 90% directly and indirectly correlated with the energy and oil price. So again, some people say that, oh, the oil price is bottomed out for a really long time. Why should I invest in this index now? If you invest in futures, options, and ETF, it's really right. But if you invest in anything about energy countries or energy companies, you're looking for the operating profit, right? It's talking about at this current price of this energy compared to their cost of this energy, whether or not it's improving their profit ratio. That's it, right? So the fact the profit ratio is really improving a lot for Russia and any other energy companies, right? So right now, technically, we can look at the target of 1350. And whenever it goes below 1200, we can cut loss. So the ETF you can choose from is the US ETF. You can choose from two. The first one is RSX. It consists of 5% of UK. If you want to purely invest in Russia, you can consider ERUS. And the turnover is a bit less. But again, if you want to perfectly tracking Russia, this is the one. And Dubai, often we think of Dubai is desert or oil and energy. It's not the case, because in fact, oil is only consists of 1% of the GDP. It's only 1%. And in fact, ever since 2013, the oil price has dropped by 37%, but the stock market has gone up by 155%, and the properties companies has gone up by 135% already. It's only because they're developing other businesses like e-commerce and a business district and all kind of stuff that they are diversifying themselves away from only energy, right? In fact, it's estimated by 2020 their e-commerce sales will be growing by estimated double, okay? That is exactly what Dubai is experiencing right now. So in fact, it's pretty attractive to buy it now because the stock market has been within the same level for the past 1 year and so. So right now, for the short term, you can speculate this index between the triangle. Whenever it hits the white line, take profit. Whenever it hits the red line, buy in, okay? But whenever it breaks the white line, which is 3,900 points, and whatever you're playing with short term or long term, you should buy this index. So the ETF is UAE, literally UAE. It's really highly correlated. Again, the price is around $17 per share. But again, for the timing you kick into this ETF, it's just a tool. You should look at the index, which I have just analyzed right before. So the third one will purely look at the growth of the interest rate. So which countries in the world is estimated to raise the interest rate for 3 to 4 times? Except Canada, the other countries is United States, right? So this is the new Fed chairman, Powell. So he's going to be replacing Yellen in February, but the first FOMC meeting that is hosted by him is in March. So it's March 21st. The probability of interest rate hike is high as 88.5%. So in the whole year, it's expected to raise for 3 to 4 times of the interest rate. So if the things I talked about in the previous video is true, that the economy and the interest hike is positive correlated, then the more the interest rate they're going to increase, the higher the growth of the economy. But do not raise the interest rate too fast and too frequent. That is the key. That is the key for the bubble. But right now, there's no bubble right now. There's really a big point to debate, but I'm not going to talk about this point in this video because I've talked about it in the previous video. You can search Gregory C and then interest rate. You can look at that video. I've proven that statistic to you guys in that video. So given that that's true, right? So the US economy is pretty good, but only one ratio that you can concern is the United States participation rate. So right now it's really low. It's around 62 to 63. So more of the people is choosing to study but not going to work. More of them is going to be entrepreneur, but they may somehow forgot to declare, or they become housewife or house husbands, right? Whatever that reason is, right now the unemployment rate is being biased. That is the only little concern that I concern about United States. So which index or which sector we should look at? The highest growth is expected to be, again, NASDAQ. We know FANG, right? F-A-N-G. But in terms of A, it can be Amazon and Apple. Let me clear that. Apple is the blue chip of the NASDAQ. It consists of 14.6%, whereas Amazon is only 3.84%, right? But the growth of Amazon is higher than Apple. So we have to understand that. We can look at the ETF for that. If you want to invest in the stocks, I've talked about Facebook, Amazon, I've talked about Google. I haven't talked about Netflix, right? I can make a video about that. But if you're not taking that much risk, then you can invest in ETF, right? QQQ is the code, is the ETF that is highly recommended and correlated. QQQ consists of 61% of technology. The rest is healthcare and industrial, right? That's right, because NASDAQ is not 100% industrial. For example, if you're making hardware, GPU, CPU, and also about telecommunications, it's all about the composition of NASDAQ. That's something you can study, and whenever the chance comes, you can invest in it, and hopefully it will good, solid, positive return in the year 2018. Remember to give it likes and share, and leave me comments in the comment box below. I will see you next time. Investing Make Easy. Goodbye.